There we go. What's going on, guys? Luis Moyano, we're back and we're talking final expense today. So, if you're here, that means that you're looking to get some final expense for yourself, right? Let's go over what final expense is and let's make sure that it's the right policy for you. So, a final expense plan, it's meant for people that are looking to make sure that they're not leaving a burden behind back to their families. So when people pass away, we all know, and we brought this up in the past, that dying is not cheap. There's going to be an expense to us passing away, whether that's a cremation, whether that's a burial, whether it's having your house or your apartment completely cleaned out, whether it's maybe your kids flying down. Now, everybody has a different place in life. Some people are up here, some people might not be there, some people might be right in the middle. But what we do know is that life is a roller coaster, right? And we just don't know where your family members may be at that time when you do pass away. You could be used to saying, hey, my kids are doctors and they're so set off. But maybe it just happens that at that time they had this dark storm come over their practice and things are just going crazy and they're just super tight on money. And then that's exactly when you pass away. So that's why having an insurance policy, having a small final expense policy could be a great relief to anyone that's going to be left behind with having to deal with all that comes with passing away. So that's going to be part one, right? It has to be in your heart that you want to make sure that that's covered, that you don't want to leave that behind. So if that's you and you know that you don't want to leave any of those expenses behind, we can go ahead and check that off, right? Also, final expense is going to be that much more flexible. It usually starts around 45 to 50 years old. You can't get it before that, and the policy goes on forever. It literally will never end. As long as you make your monthly premium, the policy will be in place, right? You can almost say it's guaranteed to pay out. Another very important thing about final expense insurance is that the underwriting is a lot more lenient, right? It gives way. It allows for people to not be as healthy, to take on more medications, right? You could maybe be a little more overweight and there might not be a weight chart or a height and weight chart that you have to follow, or if there is, it's going to be that much more lenient. And there are some companies that may be even more lenient than others. With some companies, you may be allowed to take 3 high blood pressure medications, but not 4. Some other ones may allow 5. Some other ones may allow you to explain a little more on what's going on. So the process of final expense goes through simplified underwriting, right? Simplified underwriting is pretty much immediate. Most companies will have an answer for you by the time the application is done, if not very shortly after. And what they'll do is they're going to look at your MIB, right? Once they look at the MIB, that's going to be a record of your health from every time you've gone to the doctor, from any testings that you may have done, anytime you give blood, anytime you go to the hospital, it all goes into the MIB. And once they have a look at the information and they take the answers to the questions that they're going to ask you. So as an agent, I'm going to go down through a list of questions with you. We're going to ask if you've had, HIV, if you've had hepatitis C, if you've had a heart attack, a stroke, if you have diabetes, if you need assistance walking. There's going to be many things that are going to be asked on the application. So they're going to take your answers, they're going to compare it to the MIB, and if everything matches up and it's a nice, clean case, they're going to approve it right away. If not, then they might require more information. Now, when it comes to final expense, there's usually just 3 levels, right? There's immediate, There's graded, and then there is guaranteed issue. So your immediate, your standard, your cases that are just good to go and approved on the spot, these are gonna have no waiting period. Don't get me wrong, all right? Let me explain what that means. When I say that there's no waiting period, it means that the policy is active the moment the first payment gets made. God forbid anything happens, as long as everything has been answered truthfully, then it's going to go ahead and pay out. Every company, no matter what, does have a 2-year contestability period. During the contestability period, if they feel that any funny business, if any questions may have been answered incorrectly, if something, any foul play may have happened, right, to where an agent may not be putting the right information, or they feel like things just didn't go accordingly with how the application stating, and the questions have not been answered properly, or any type of funny business, inside of those 2 years, they can contest the policy. And outside of those 2 years, they can't. And so it's very important to always be as honest as you possibly can, as straightforward with your answers, and that way you'll never have a problem during the contestability period. That's different than what a guaranteed issue policy is. So you have your standard policies, then you have your graded policies, right? The graded policies have a return of cash or return of premium plus 10% for the first 2 years. That's not the same as a contestability period. This is now a graded period that if you were to pass away inside of that graded 2-year period, then all the funds that you have paid into the policy will be returned to your family plus an additional 10%. Better than any bank out there, right? So instead of saving your money and putting it under your mattress, put it into an insurance policy, because that's going to be able to make sure that worst case scenario, whatever money you are paying towards the premium would be given to your family plus an additional 10%. I can use my father, who he may rest in peace. He passed away at age 61. He had cancer. I wasn't doing insurance at the time, and I did get a final expense graded policy on him, right? Instead of him living the whole 2 years, he passed away inside of that time frame, but it gave me back all the money that I paid plus the 10%. It allowed me to completely cover the cremation. My mother, my sister, although they wanted to contribute, they didn't have to. I was happy to have been able to take care of the whole thing because I planned and I saved accordingly and I put it into a policy. Had it been past the 2-year mark, then the policy would have completely paid out and I would have been able to maybe do a little more for my mother and my sister. So that's how that works, right? And then you have your guaranteed issue policy. The guaranteed issue are for people that may not be able to get qualified right away, that have recently had a stroke, that have had 2 or 3 strokes in the last 2 or 3 years, that have had an HIV, that have just, more serious health conditions. Well, they can still get insured. And we all know that just because you have those health conditions, it doesn't mean that, it's going to be sooner than later that you're going to be cashing in that policy. But it allows you to get that coverage. Obviously, it's a little more expensive because of your health issues, but you can put it in place, and 2 years down the line, the full death benefit will pay out. And if not, again, it's 10% more. So that's how it works, right? You have your standard policies. They'll go ahead and be active and effective immediately. You graded policies that will give you that 10%, or your guaranteed issue policies. Graded guarantee issue, actually, they're going to be very similar. Graded is going to do that for you, and guaranteed issue is going to accept anyone. Doesn't matter but it's going to have that 2-year waiting period, and same concept, the 10% on top of that. But those are the three. They all come in different price points. So speaking of price points, I'm going to show you guys very briefly how a quote looks for these policies. And what I'll do is, once you guys are ready to move forward a little more and you want to start getting quotes, I'm going to ask you those health questions. We're going to make sure that I can help you qualify for one of these policies. We're going to quote out and pick the best company for you. We're going to submit the application and make sure it goes in place. That way that your coverage is approved. So why I'm saying that is because I'm going to show you guys what I personally use for all my clients to be able to do the quotes. And what am I doing? Oh, that was easier. Okay. FEX, here we go. I had the wrong button. Okay. So this right here is my quoting tool. It makes it very simple. I can share it out with you. But let's say we're looking at $10,000 level standard. There you go. There's graded and there's guaranteed issue right there. So level day one coverage. Let's talk about a male here in Florida. Their birthday's 9/9/62. That makes him 60 years old. They stand 5'8", weigh 180. They're non-smokers, and they're gonna go ahead and do a bank draft, right? However, they're healthy. No health conditions here at all. Enter health condition, enter medications. We will put in anything that may be going on with you to see what the quotes look like. So we generate that quote. And remember, these are whole life policies. The price is never going to go up. It's never going to go down. It's just not going to change. If you're looking at this video, you're a senior, right? As a senior, you want to make sure that you know exactly what's going in and what's going out. You're normally in a fixed income and you don't want it to be all over the place. So here we know Transamerica, great company, price buster, $43.49. That gives you a $10,000 coverage, right? Mutual of Omaha, huge name, $43.76. Oxford, $45. Liberty, $46. Foresters, $47. Prosperity, $47. AIG, $47. Great Western, $50. American Amicable, $50. CVS, $51. Look at this. Now we're seeing already Transamerica again, but now immediate solution standard rating. So they have their standards and then they have their preferred. Transamerica words it a little bit differently, but that's their graded policy. Royal Neighbors, America. Check this out. This company has a level product at $52 when another company over here, you know, Transamerica, Mutual of Omaha, has the same level product at $43. So it's about a $10 difference every single month from here to the day that you pass away. Eventually, that's going to add up, right? So we want to make sure that we get you the best policy, a good company, and a price that you're comfortable with. Some people are going to say, well, $10,000 is not enough, you know? We'll go ahead. We can go up to $20,000, $30,000. A $30,000 policy for the same person, you know, Transamerica will have $123, $124 for a healthy individual for a $30,000 policy. Now, that's gonna be your quoting tool, and we can play with it. We can add medications. We can add diseases, if you say, or conditions that may be going on. But we're gonna find a policy to approve you, and we're gonna get everybody approved no matter what. Okay, people at times say, like, you know what, you can burn me and throw me out the window. It's sure, you know, of course, you can go ahead and have that mindset of not really caring. And that's okay, because no one's going to take your arm and twist it and make you care for that. And I don't think you'd be watching this video if you didn't actually care and wanted to put something in place. This video is for the ones that actually want to put something in place, right? And so with that being said, some of the other factors to consider is that a lot of the times on the clients that I sit and meet with, there's going to be two incomes, right? You got, let's say, $2,000 from the Mr. and another $2,000 from the Mrs. You put that together, it's about $4,000 a month. But the moment a person passes away, the surviving spouse gets the larger of the two Social Securities. If we were to assume that they had nothing else but that Social Security, then that income just went from 4,000 to 2,000. If things were a little bit tough to manage at 4,000, imagine what they're going to be now at half that. So some people look into having a policy like this to put some income protection in place, and it's not going to be anything massive, right? But you're looking to protect $2,000 over a 12-month period of time. You can look at a $24,000 policy. Maybe you add an extra $6,000 to cover any cremation, burial expenses. You're looking at a $30,000 policy to now make sure that you handle those final expense costs and that you leave behind enough for your significant other to have no fluctuation in their income for the next year so they can figure out what to do. Final expense, it's a great policy. It's a great way to be able to get that insurance that we all wish we would have gotten earlier, but we now can. And for some people, they can't get it earlier because they possibly had some health conditions that kept them from being able to act earlier. Is it possible for everyone to get life insurance early on in their life? Sure, but we can never work backwards. We can only go forward. So the time is here. Let me answer any questions that you guys might have. I'm going to put a lot of content out there right here, right there. You're going to see where you can go ahead and subscribe to the channel. And I'm going to keep making videos like this to be able to help out. We're going to break down different subjects and different ways of being able to address the final expense market. So please subscribe, comment, ask questions, share. You're going to see my email address right above me over here where you can go ahead and contact me at any time. I'm more than happy to help you protect your family. If you have any questions, please reach out. Again, my name is Luis Moyano. I hope you enjoyed this video. Have a good one.